Good afternoon, everyone, and welcome to Stock Market Today. You have Alyssa Corum here, and I'm joined by Justin Nielsen. And what a way to cap off the week. We're going to break down all of the market action, and Justin, some interesting stock action to talk about as well.
Yeah, it was definitely a day where you wanted to avoid panic selling. And so what we're going to talk about is different ways to protect your portfolio and prevent the panic. So we're going to start with GSX Tech Edu stock and also get into Nvidia and then end up with one of your stock picks from the week, T-Mobile US.
All right, perfect. Well, let's start off with a look at the major indexes. It started off nice and quiet to begin with in the morning, just down a little bit. But then we saw a lot of selling come in. The NASDAQ did manage, though, to close off of session lows for the day, down about 0.9% above that 1,000 mark, I will point out. And the S&P 500 finished essentially flat for the day, the Dow up 0.2%. So we were able to come a little bit off of the session lows by the end of the day, Justin, but not a pretty day for a lot of growth stocks and software in particular.
Absolutely. And the thing here though is you had 7 days of consecutive
Yeah.
gains, and that's usually something that's unsustainable. So we're going to be talking a little bit about unsustainable moves. So this was nothing to be concerned about. Now, that doesn't feel so good when you're looking at some of your stocks take some really hard hits, especially if you were into some of these high flyers like Datadog that was down, a big amount, and Fastly yesterday. So there've been a number of hard hits, especially lately with this earnings season. But again, when you take a step back, and that's what we're going to be talking about today, when you take a step back to the overall picture, this is very normal action, and this is just part of, they can't go up every day. Sometimes you have to hunker down and be prepared to take a punch.
And again, still closing above that 11,000 level, which I think is another cup half full thing to mention.
Absolutely, absolutely.
Yeah, and we want to quickly touch on the S&P 500 here, SPY, the ETF of that, and it had a really nice week.
And what I wanted to just point out here is, I mean, this one is still continuing. I mean, it still was able to manage to get a positive day for the day. So there was, for as much destruction as there was on the Nasdaq composite stocks, software, as you mentioned, a lot of the S&P 500 was not hit nearly as hard. So a little bit of rotation possibly, but again, this is just one of those things that happens. Things fall in favor, out of favor temporarily, but if you have good gains from earlier buys, there was really not much that you needed to do here.
Right. And Justin, you mentioned the importance of protecting your portfolio, and those strategies really came in handy today for holders of GSX in terms of this is something that we talked about on IBD Live this morning, just the huge gains that it had seen in the past couple of sessions and how it was looking early on in the day. So we were talking about some hedging strategies for when you're put in a position like this.
Yeah, so
Because
there's
it ended up closing down 20% for the day.
Yeah, exactly. And I mean, it was one of those things where, I mean, it looked great, and it's like, it looks like one of those things that, oh man, I'm so bummed that I missed it as we were talking on IBD Live. But one of the things we were noting is that this is an unsustainable move. When you have something, this was over almost 40% above its 10-day moving average
Wow.
line. So that's the it's hard to see, but it's that close line right there. It was 40% above that line. When you get that far extended, in our experience, you're going to come in, and usually that means you're going to come in pretty hard. So Chris went through a whole strategy of, look, if this undercut the previous day's low, you could put on a hedge. And what he was kind of talking about was doing a put. So this is kind of a married put strategy, one way to do it. And he was saying, okay, you could do the October 125s. And even with just kind of half the position hedged, what that would have done is kind of take the sting out of this. So for as much as the stock was going down, that put would have been helping offset that loss. So with the October 125, you were getting some of that distance, so you weren't getting the time decay issue happening there. So that's one way of doing it. Another way is to simply say, you know what, I've got a great gain in this. Let me start taking some profits. If you feel like there's more potential, you can just take a partial profit, but you at least want to be taking some money off the table when you see something get up that much. And of course, this did get hit by a Citron report. Again, they're kind of talking a lot about how much they think that there's fraudulent activity going on, that a lot of the subscribers to their services are not real. So that's one of the things that hit the stock too.
Yeah. And if hedging is something that's new to you, we did talk about this in detail on
Yes.
IBD Live, but we also have a hedging webinar. You can find that if you go to the top navigation of our homepage. Under videos, you will see webinars, and there is a great webinar that you and Chris did, and I highly recommend everyone checking that out. We also have an options column now, so that's another great resource as well. And if options aren't your thing, like you mentioned, there is a reason why we have that 20 to 25% profit taking rule whenever you're buying a stock at a proper buy point. It's a good idea, especially when you see something that's getting so extended from those short-term moving averages like this, to take a little bit off the table. So a really great example here. And
in
we
that hedging
also,
strategy, I would kind of take a look at the Tesla example that Chris goes over in
perfect.
detail. Yeah, it's very, very instructive.
Yes, highly recommend that. And also Nvidia, it reversed lower today, down a little bit over 1%. But this is a stock that has been one of the darlings, I guess you could say, of this rally. Just, I mean, an incredible move here, holding support at that 21-day moving average the whole way, but reversing here off the top. How are you thinking about handling something like this in your portfolio when you really still do have a lot of those gains?
Yeah, so first of all, I should just disclose that I do have a position in this myself, and this is one that we put on leaderboard way back in April. So if you look at where it's gone from April, this is kind of a non-event. This is nothing. Now, if you look at the daily, this is a bad day. It's an outside day. That means that the day's high is higher than the previous day. The day's low is lower than the previous day. And the fact that it closed so low in its range, that's not good action. Now, it did come up quite a bit off of its lows. That's positive, almost to the 40% range. So not too bad. We were going to take this off of Swing Trader just based on this daily action because it didn't look great, but we decided to go ahead and hold on because of the way it looked at the end of the day. Now, if you step back to the weekly chart, you can kind of see what we're looking at with leaderboard. When we're going through things on leaderboard, we look at this, and this was still an up week. This was, still closing in the upper part of the range. This is a non-event. This stock, still looks great right here. So there's really nothing to do. And so despite the fact that this was down considerably, you again want to avoid that panic, avoid looking at the intraday charts in that case, because they're going to look really wild. Step back to the daily and preferably the weekly for those position trades that you have.
Yeah, such a great point there, Justin. All right. And last but not least, we do want to check in because it is earnings season. And one of our strategies for earnings season is looking at stocks that are gapping out of bases on their quarterly reports. And we did see that today with T-Mobile. We put this on your radar earlier this week on IBD Live as a stock that could potentially, have that kind of move. Always good to have a game plan before those quarterly reports are out. What are the stocks that are setting up? And so we did have T-Mobile here closing up about 6.5% for the day. So it did come in with the market, but still a nice gain for the day.
Yeah.
What are your thoughts?
And I think it's great that you're so humble and you say we when it was you. This was Allie, kind of pointing this out. And again, you were absolutely right. This was a great flat base setup ahead of earnings. Not necessarily something you wanted to buy ahead of earnings. You don't always want to step in front of that freight train, but afterwards, you kind of look at this breakaway gap, and it went through. And let's just take a look at this. Let's say you bought at the peak. The peak today was 118, and so that it was up 9% at that point. Now, if you used the day's low as a potential exit, well, that was only a 4% risk if you bought it at the absolute top. So that's not too bad. If you let it come in a little bit to maybe the top of that prior range at 111.58, you're giving up a couple extra percent. But for as extended as this was looking, and as much of a gap up might be scary, this was still in that buy range for a good portion of the day. So this was something that was buyable. You're seeing some pretty big earnings differences here because they did have that merger with Sprint, and so yeah, that's one of the things that you just have to be aware that that's going to change things for a little bit as they kind of absorb Sprint. So the the sales are maybe a little bit different. The earnings are going to be a little bit different for the next 4 quarters as that absorption happens.
Right. But one thing we do know from our research is that these earnings gaps often do lead to further gains. I mean, if you rewind to last quarter, we had PayPal, we had Twilio. Obviously, this is in a different group,
Mhm.
but there's potential for that there. So, what we would want to see from here, though, is we want to see that stock now hold these gains, right?
Right. Yeah, if it goes flat right here, there's nothing wrong with that. You know what? Just real quick, if you could pull up Chegg,
Mm-hmm.
CHGG.
Yeah, that was another
This is
one.
another example of,
Mm-hmm.
back at that earnings report, leaderboard put it on right there, and it did come back down into that area, but it actually offered you another opportunity to buy. So that's not bad action at all. The lows of that gap up day held the entire move. And so this wasn't a hard hold. So hopefully that
Yeah.
happens with T-Mobile as well for people that bought today.
Yeah, who knows? But we will definitely be keeping an eye on that one. All right, everyone. That is it for today and this week. Thank you for joining us. And you can be sure that the conversation will continue. I usually say on IBD Live, but even sooner than that, the conversation will continue on this week's weekend stock market update. It's a new video that Mike Webster and I are doing. So we're going to be recording that soon and releasing it today. You can watch it over the weekend, maybe with your morning coffee, perhaps. But we're going to dive deeper into the market action and give you some takeaways for what potentially you could expect next week. So we look forward to doing that. And of course, we will also see everyone Monday morning on IBD Live. Isn't that right, Justin?
Yep, certainly. I'll be there.
Perfect. All right, everyone. Have a great weekend, and we'll see you right back here on Stock Market Today next week.